here at Neighborhood. So, hello everyone. My name is Rosa Franco, and I am the Director of Lending at Neighborhood Trust Federal Credit Union. I'm very happy to be here today, and this is the beginning of a series of webinars that we are going to offer to the community. And today I am very pleased to have Marianys Pichardo, who is our loan officer, and we will offer this seminar with the idea of engage our members to learn more about practices and tips that will help them to improve some practices that are very beneficial in terms of personal finances. But also we want to invite you to continue every week, because we have a series of topics that we want to discuss and we want to share with you. So just as some logistics, we will keep the microphones mute because we are recording this session, and we hope that we will be able to share this in our social media platforms. But please feel free to ask any questions you may have through the chat, or also at the end of the presentation, we can have a sort of very open discussion to answer any questions you may have, okay? So Marianys, please introduce yourself.
Hi, everybody. I'm very excited to be here. My name is Marianys Pichardo, and I am the Associate Loan Officer here at Neighborhood Trust Federal Credit Union. Today, we have a very exciting topic about, as you can see, master your credit, how to master your credit.
Yeah, so are we ready to start?
Yes.
So this. So can everyone see my, let's see.
Okay, so as we spoke before, today we're gonna learn on how to master your credit, importance of credit, tips to start, build, repair, and maintain a good credit score, and understanding credit scores. We will also speak about how to apply to the different types of loans that we have here at the credit union. First one, what is credit and why credit is important? I think credit is, in summary, is just how we manage and take care of other people's money. Is a way to measure how risky it is to lend you money. And as the number one question would be, if you were a banker, would you lend yourself money? How to build your credit. There are different tips. You can build your credit with us with secure loans. Secure loans are secure because we would be holding the money in your account until you finish making your monthly payments. And monthly payments can start as low as $45 per month. It could be from $500 to up to $2,000. You can repay it in between 6 to 24 months, and the interest rate will always be a fixed rate of 8%. Also secured credit cards. Secured credit cards, they're also secured because you would be using your own money and use it as a credit card of up to $2,000. Right now we have a campaign where if you come in and you say that you would like to open a secured card, then if you have $350 in your account, we would put the $150 so that your credit limit could be $500. You want to keep in mind that you want to pay on time. Always, this is very important. You don't want to max out your credit card limit. You always want to maintain 30% maximum. You want to mix your credit. You don't want to apply too much. If you apply too much for credit, you know, that could lower your credit score. And you want to give it time. 2 years or less, that's considered new credit.
Okay.
Give us a few minutes. There you go. Okay. Tips for maintaining good credit. Like I said before, you want to think like a banker. If you were a banker, would you loan yourself money? Keep your credit within manageability. You want to make sure your monthly debt is not more than 45% of your net income. So for example, if your net income is $1,000, but you're spending monthly around 2,000, that means $1,000 is coming from your credit. And that's why you want to keep your income, and you want to keep your net income. It has to be, you want to manage it. Let's see. Best advice, put a recurring payment on the card that you will.
So basically, so it's you will pay for any.
Yeah, so you want to put a recurring payment on the card that you're still going to make monthly payments too. So you want to basically just put recurring payments on the credit card. So that way you don't have to go in every month, make sure that, oh, am I paying it on time? If you put a recurring payment, that's going to help you to just pay the minimum or whichever amount it is that you choose on your credit cards. You don't want to purchase anything that you cannot pay off that day you buy it. You always want to pay off or keep the balances under 30% or 50% of your credit limit. Common misunderstandings on damaged credit. A lot of our members believe that if you have bad credit, that cannot be fixed, but credit is very flexible and is fixable. Information is removed after 7 years if there's no activity on your credit report, and bankruptcy stays on the bureaus for 10 years. A lot of our members think every time I pull my credit, my score goes down. A soft pull does not affect your credit. So a hard pull, it's going to be an inquiry on your credit report, but soft pulls, they don't affect your credit at all. Hard pulls down within 45 days when looking for mortgages, and 3 to 4 pulls are generally okay. There needs to be a pattern for score to go down. I can pay someone to fix my credit. That's not recommended. Anyone who offers to fix your credit, if you pay money, is usually trying to just make money off of you. Nobody could just receive money to fix anybody else's credit. I pay for a credit monitoring service. Any type of credit report monitoring by anyone except for you is unnecessary and does not work. The credit path. The path to build your credit, you can start off by credit builders, which is the secure loans that I explained before, personal loans, car loans and refinance, mortgages, and business or commercial loans. And just keep in mind that credit builders, there are no history for credit, and we do not check your credit history. So we do not hurt your credit. We actually just help you save while building your credit.
So basically what you show here is that we start from, like in every case, right? So you start from the beginning, which is the credit builder,
the little one,
and then you can take the next step, and you can keep up or get a higher credit, right? And then you can, so this basically is a credit path. It shows that we can start small, but then based on the goals or financial goals that everybody makes, it would be possible to change that, right? So we will answer to your question, election. Just give us some minutes, okay? But just to keep this path shows sort of the conventional way of building credit and how we want to start from the credit builder, and how little by little a person can move towards a mortgage, or if they are looking for a commercial or business loan. So that would be another way to continue. Continue, right?
I think you explained a little bit about.
Yeah. So basically, as Marianys was explaining, basically what we have is that the most all the information or credit information, it's evaluated and shared between creditors by the credit bureaus. So right now, the most used credit bureaus are Equifax, TransUnion, and Experian. But of course, depending on the type of industry, if we are talking of rentals, there are some credit bureaus that are working with for landlords. So that's a way to also share how tenants do or what's the payment history for tenants, for example, right? But these three are the most known and used. In our case, we report to the three credit bureaus, so that's something that really helps those who want to build credit, because they do not build credit only to one of the three of them. We report to the three of them. And as Marianys was explaining, for credit builder loans, we only pull, we do soft pulls. So it's something that is not going to affect. But since we are talking so much about credit scores and this kind of rating, right, and evaluation, basically the score is a number that is calculated mathematically by the credit bureau. So each one of these credit bureaus develop their own FICO model. But what we know, because it's the formula, the calculation, is kept secret. But basically, the ranges start from 350 to 850. And if you don't have credit, of course, it's because there is no history to show or to evaluate. And that means that probably if somebody doesn't have any open account to be reported to the credit bureaus, then there will not be any existing score. Now, there are some, so between lenders, we consider, we use some ranges. And something that is really, really important to remember is that when the FICO score is under 600 or 620, it's really difficult, or it becomes more difficult for the borrower to have access to credit unless it's super expensive credit, right? And the better this number is, that means that your payment history or your records are better. So good credit is actually considered 725 or 725. So how is the score calculated? Because everything has a weight, right? So how we behave, financially speaking, has a weight in the calculation of this FICO score. So probably one of the most important aspects considered to calculate the FICO score is the payment history. If you notice in this, the arrow shows 35% of how we make our payments on a monthly basis. That has a weight of 35% in the calculation of our FICO score. And that means paying on time, but also making the right or paying the right or proper amount. So this is something that is really important because, for example, some of our borrowers have or open the credit builder loan, and if the monthly payment calculated is $44.10, but they only make a payment of $44, those 10 cents can make a big difference in the payment history. So it's important to remember these details that can be seen like super, like nothing, right? But at the end of the day, will make a big impact. Also, the amount owed has a big impact in our in the calculation of our credit. And that means that, for example, if we have a credit card that has a credit limit of $1,000, and we are always very close to the credit limit, as Marianys was explaining, that is going to negatively impact your credit score. Why? Because we are basically sending the red flag between all the lenders or creditors that we are at the limit in the use of money that we are borrowing from other organizations or from any financial institution. Now, the other factors like the length of credit history, for example, opening new accounts all the time also impact, right, very, very frequently, or how much, in what way we are using credit. So you see that the weight on these other factors are lower, but they also impact in a positive or negative way. So one of the things that we have to remember when we have credit or we are establishing credit is that the type of products we have also reflect how able or how knowledgeable we are in the use of our credit. It's not the same to use 10 credit cards than having only one credit card, one student loan, one personal loan, one car loan, for example, because that means that we are using credit wisely and we are using credit for the reasons that we really need. So be careful with that, especially when you do or go out for to do shopping, and then you have all these credit card offers
from so many stores.
Yes. So just to give an idea of why credit is important is because if this behavior or this credit score reflects how good or how poor our payment history is, that is going to be used in our favor or against us. So that means that the lower the credit score, that means that the risk is higher, therefore the interest is going to be also higher. The monthly payment, right? And that will be reflected in the monthly payment, but in the long term, we end up paying more interest. So that's why if you see in this example that for a mortgage loan of $200,000 with a term of 30 years, you see the difference in the total amount paid by these two borrowers, depending on how their FICO score or the credit score was at the time that they got their loan. And you can see here that between the lowest interest rate and the much higher, there is a difference of $74,000, which at the end of the day is a lot of money that could have been used to do some renovations, right? Or going for a couple of trips at least per year.
Or the furniture for the new house.
Exactly, yes. So we wanted to share this basic information about credit, but also since we have Marianys here and she's dealing on a daily basis with our borrowers, I wanted to ask her to share her inputs in terms of how is the work, and I have some questions, and of course we are going to also answer questions that you have. And one of the questions that I had from Marianys is, what do we need, or any person, if somebody wants to apply for a loan, for a credit builder loan, what that person can do, how to apply for that?
For a credit builder, a secure loan, if you are already a member and you have an account with us, you can apply through our website, Neighborhood Trust. We're gonna go to the website right now.
So it's Neighborhood Trust.
Neighborhood Trust, FCU.org.
And
now you just go on personal loans. And right there, the first one is going to be the credit builder. Once you apply online, it will redirect you to the website called Happy Mango. And there you can create an account and apply for the secure loan. The only document needed for a secure loan is a valid state ID. Once you have that, a valid ID, then you can apply. If you are not a member, you can also do it this same way. The only difference is that once you have your account through Happy Mango to apply, it'll automatically give you the form for membership, and it'll tell you the documents that you needed in order to create an account. And if you are not a member, you can also come directly to the credit union. Also, if you are a member and you cannot apply online, you can also come into the credit union. The only document needed, as I explained before, is a valid ID.
And for example, since we are talking about credit improvement or credit building, right? So the credit builder can help those who want to improve credit or maybe want to establish credit too. But what about those who want to pay off balances, outstanding balances? What type of products we have for that?
We do have the loan debt consolidation, which it's basically that we consolidate your debt. For first time applying, you can get up to 5,000. Second timers can get up to 10,000. And like I said, we do check to vendors, which means if you come in and you tell me, oh, I have 3 credit cards that I want to pay off, we'll ask for bank statements of those credit cards so that we know the amount owed. And we would pay, if approved, we would pay those amounts for you. So we would do a check to the credit card that it is owed, and we will mail it and do that and pay off the amount that you owe.
Thank you. So Election has one question, and is if you pay off your entire credit card, will that bring down your credit score? No, it won't bring that down. Actually, we are not obligated to keep standing balances in our credit cards or revolving accounts. Actually, it's a good practice because then so you are basically paying less interest, right? So it's a good, as I said, it's a very good practice. You just need to make sure that you are always on top of the monthly payments. And the other question is if the secured loan, is that the same as a paid loan or a pay loan? I am not sure. Could you elaborate, Alexian, about your question? Let me unmute you. But while we wait for Election to explain the question, I have another one. And so what do you think are, based on the experience you have working with borrowers, what do you think is, or are the common mistakes or errors that borrowers make when they apply for a loan?
A lot of the mistakes that I see is that some members bring either too much documentation or they don't bring enough. So the 3 documents required for debt consolidation loans, also personal loans, are income tax, the latest. So if you're applying in 2021, we would need proof of income tax from 2020. We would need proof of rent payments or mortgage payments. This was very tricky because some of our members are not on the lease. And then if you're not, you can bring a notarized letter from the person on the lease stating how much you pay per month and also the address on where it is that you're living. And you would also need proof of income, and that would be the last 3 paychecks. And self-employed members, they can apply if they submit 3 months worth of statements. A lot of our members either don't bring one of these documents or they bring another document, but the only documents required are proof of income, proof of rent payments or mortgage payments, and the last income tax return.
And you mentioned before that the debt consolidation loan is disbursed on a check to vendor modality. What does that mean?
Well, it means that, like I said before, if you come in and you say, I want to pay 3 of my credit cards, we would make the check to those credit cards. So the check doesn't go towards you, it doesn't go towards your account, it goes directly to the company that you owed. A lot of our members also owe a family member or a friend, and that becomes a little harder to do a debt consolidation because then there is no documentation stating how much it is that it is owed.
So that's why it's better to use formal or loans or credit
yes.
from formal financial institutions, right?
Yes.
Also, because if we have good payment history, that is going to help to improve our credit. Also, what is the criteria? Because I'm sure that many of our borrowers or potential borrowers will want to know, okay, I have all the documents ready. I want to apply for a loan, but how would I know if I can qualify or not for a loan? So what would be for a loan or not? So what would be the criteria? How do you take into consideration when you evaluate that?
For a debt consolidation,
Or any personal
loans, yeah, you want to make sure that your credit, if you already have established credit, that your credit is above 620. And once you come in, we review the documents, and then we can let you know if it's approved, denied, or counter offer.
So for example, if you want to check if you can qualify or not for a loan, just keep in mind that in the same way that Marianys was explaining before, that ask yourself if you will be a lender, you will lend money to yourself. So one basic calculation you can make at home is to see, based on your monthly income, no more than 45% of that amount will be dedicated to cover your rent or mortgage expense, plus the minimum monthly payments as reported in your credit, plus the new loan or the new debt that you are trying to acquire. So all together cannot be over 45%. What does that mean? That if my monthly income is $1,000, no more than $450 will be used to cover rent expense, plus my monthly expenses if I have 2 or 3 credit cards, the minimum monthly expenses, plus the new loan that I am trying to obtain. Why this is important? Because that means that the remaining 55% is the one that you will have available to cover food, transportation, utility bills, etc. So that's important to consider when you are applying for a loan. If you are looking for a debt consolidation loan, then it's a little bit different because the monthly payments for the accounts that you are going to pay off with the new loan will not be considered in the calculation. So I think it's important when you are applying for a loan to make sure that you, depending on the purpose of the loan, is that we do the calculation, and that's the reason why Marianys always requests, and this is by policy, we need to know what is the purpose of your loan. So that way we can help and have a better idea about how to do the calculation. So Mirlene is asking if we are able to do a debt consolidation for student loans. We can, but just keep in mind that there must be some other lenders who are specialized in student loan debt. So keep in mind that what is the minimum, the lowest rate that we charge for loans in general?
5%. So that
5%.
consolidations, it starts with the interest rate of 5%. That would be the lowest. But you will also want to keep in mind that if it is your first time applying with us, the maximum amount allowed, it would be 5,000. If it is already your second or your third time, then you can get up to 10,000. But first timers can only apply for up to 5,000.
We can sometimes make exceptions, right? But of course, the most important part when you apply for a student loan is that you need to do your own due diligence and check if you can find, as I said, another organization that specializes in student loans. Also compare interest rates, right? Because if our lowest is 5%, 5.75%, I think. So that means that it makes sense if you want to refinance or consolidate a student loan if that loan is at a higher interest rate. Now, keep in mind also, this is something very helpful for when you are applying for a loan at neighborhood trust, is that we don't charge any prepayment penalties. So even when $10,000 may be seen as a lower amount for some outstanding student debts that we've seen are much higher, right? So as an incentive, we can help our borrowers in the way that they can repay much faster the loan that they have with us. And then they can keep refinancing and including other debts. So the repayment or the timing is really depending on how organized you have your budget, right? And how much your budget allowed to assume these monthly payments. In the same, so basically what we wanted to show today is that we can, Mariany was explaining that we can approve, we can sometimes deny a loan request, but we also offer, we can make a counter offer, right? Even if a loan is not approved, we try to make sure that we explain the reasons why that loan was not approved. So that our mission is to help borrowers to understand what next steps can be done in order to be loan or eligible for a loan at some point. And that's another benefit of working or having an account at Neighborhood Trust, because you can also request the financial counseling, right? So yes, yes. Exactly, election, you're right. So that's the credit builder loan that you don't need to bring any upfront amount, right? So you basically make your monthly payments, and at the last payment, the total fund that you sort of saved, right, is available to you. What's important to know about the credit builder is that a difference of other financial institutions, you don't need to start with the lump sum from scratch when you open the credit builder. But since there is no credit history, right, it's difficult to keep the money available because we don't know what is the experience of the borrower in terms of repaying debts. So that's the reason why the credit union pledges. So we put the funds, instead of you putting the funds, we put them in your account. But since this is some money that you will not have available from the beginning, there is an interest rate, an interest that is charged. And the interest we charge for those loans is 8%. So if you compare that to with the interest that is charged in other financial institutions, is much higher. But also in many cases, you really need to put your funds upfront. So you need to bring the $500 and then you open the credit builder.
So basically you save while you're also building your credit.
Yes, yes. We avoid to use the term saving because you pay interest, right?
Yeah.
But it's true. So you at the end are building or saving an amount
Saving, yeah,
that
an
will be
amount.
available. Now, something that we also recommend now that we have this new campaign is that, do you want to explain how the secure credit cards work?
So we also have, apart from the credit builder, the secure loan, we also have the secured credit card. And it works exactly as another credit card, a regular credit card. The only difference is that it is secured because that we would be using your own money. So you come in, you say, I want a secure credit card for 500 or 1,000. It would be secure because the 500 or the 1,000, whichever amount you would like to use, it could be up to 2,000, but it would be your own money. Right now, we have a campaign for the secured credit card, whereas if you come in, you want to open up a secured card and you already have 350, like I explained before, we would put in the 150 remaining so that your credit limit could be 500. And then you could use it as a normal regular credit card. It only differs because it is your own money, and that's why it is secured. The interest rate for the secure card is 9.5.
Yes, and just also remember, one of the tips that Marianys explained before is that when you use a credit card, you don't want to max out the amount that you have as a credit limit. So remember that, and every month try to lower the balance to at least 50% of the credit limit of, even if it's a secure credit card.
You want to keep it in between 30 to 50. You don't want to use the whole limit because that would help you best with your credit.
So I think this is it for today. Unless, let's see if there are any other questions. We don't have yet secure credit cards for business accounts, but I think we will have some interesting announcements soon for the business community at Neighborhood Trust. So please stay tuned. I hope before the end of the year, we are going to launch that. But also, instead of business cards or business cards for businesses, right? We have credit lines. And I think that's another option you can use for your business. If you are interested, the minimum credit limit is $500 up to the amount that the business can qualify for. So I think that will be another feature that you can take advantage of, because we are now trying to start some sort of communication with the business community, explaining that now, since we are very close to the Christmas season or holiday season, we want to start working with our business members to get the working capital they need to launch to use for their campaigns.
Is there a credit check for secure cards and loans? No. If it is secured, if you're doing a secure loan, a credit builder, or a secured credit card, there is no credit check. The only time that we do check the credit would be for the debt consolidation or personal loans. But like I said, with secure cards and secure loans, we're trying to help you build your credit. So we do not hurt your credit at all. We don't do any hard pulls.
Right, and there is another product that where we do not do any pull on credit, which is the
Co-op cash.
And that can be another product that to be used to establish credit or build credit, because it's actually real credit per se. But what's the limit on the first time?
So for members that apply for a co-op cash the first time can only apply for up to 500. On the co-op cash, we do not check the credit. The only documents needed would be the last 3 pay stubs. And the interest rate on the co-op cash is a little higher, is 28%, because there is no documents needed, just the pay stubs.
And that's a product that we recommend as an alternative when there is an emergency, but we know that there are many members who use, for example, pawn shops, or they use different types of credit from predatory lenders that are much higher than 28%. So we know that there must be some sort of limits in terms of having not necessarily with credit, but the person really needs to have some financing, right? So as Marianys was explaining, there is no credit pool for that. The only information we require is to show the proof of income, monthly income, but also the borrower needs to be a member for at least 1 month. And the second time,
so for second timers who apply for a co-op, so first time is up to 500. Repayment history, it's 6 months, so you can repay it in 6 months, and the interest rate is 28% or 25% if you want to do automatic payments. For second timers, you can apply for up to 2,000 to repay it in 11 months instead of 6, and the interest rate now lowers to 18%. So if you made your monthly payments on time on the first loan, now on the second loan, we could lower it to 18% instead of 28%.
So it's another incentive that we offer to our members. So to build credit, to build a relationship, right, with a financial institution that as the trust, we are always open to listen our members and offer something that is more available. Yeah. Okay, so if we don't have any more questions, I think we are going to leave it.
Our contact information.
Yes, so exactly. So let's do that. Okay.
So if anybody wants to get in touch, if anybody has any questions about the credit cards, not only secured, but maybe unsecured, or the loans, not only secured, but also unsecured loans, my name is Marianys Pichardo, and you can reach me at my email, mpichardo@neighborhoodtrustfcu.org, or you can call me at 212-740-0900. My extension number is 323. You can also send a text message to that same number. Our emails are consumerloans@neighborhoodtrustfcu.org. And you can also email member services at neighborhoodtrustfcu.org. And here below, you will see also that our website, neighborhoodtrustfcu.org, and you can also follow us on Facebook, Instagram, and Twitter.
And all the campaigns and new promotions we have are available in our social media. So we invite you to follow us and spread the word, and we will also share this presentation in our platforms. Well, thank you so much for being with us today, and we will see you next week, hopefully, where we are going to do the session for the small business owners.
Bye.
Bye.